By following the advice of renowned investor Warren Buffett, you can improve your financial situation and get an advantage in life's financial game. Buffett has offered countless advice on how to approach student debt, saying that the best course of action is to attempt to avoid taking out any loans at all, or if necessary, to limit them. Moreover, he says that you should have a plan in place to pay off your student loans in 5 years. Keep watching this video to find out how Warren Buffett can change your financial future. The one investment that will change your life, according to Warren Buffett, and it's not a stock. The billionaire Warren Buffett claims that there's only one investment that supersedes all others: investing in oneself, in an essay honoring Forbes' 100th anniversary. Buffett advises, address whatever you perceive your inadequacies are and do it now. Buffett continues by disclosing his weakness, which was his fear of public speaking. Buffett realized early on in his career that his shortcoming would prevent him from progressing. He paid $100 to enroll in a Dale Carnegie course. My life was altered by it. Buffett's confidence increased as his public speaking skills got better. It aided his stock sales. According to Warren Buffett, developing your talent is an investment that no one can take away from you, particularly in an area of public speaking. It cannot be taxed away. You cannot lose it to inflation. You will always have access to it. It seems like a worthwhile investment. According to the most recent statistics on inflation, prices increased 7.9% in the previous year. This means that your emergency fund is costing you money because it has increased by a factor many times greater than what you are probably receiving on your deposits. It's only natural to doubt your cash savings plan during these trying times. Based only on the numbers, you might think about investing your emergency fund in equities and other assets that have returns that outpace inflation. The figures don't always tell the whole story, even in financial problems. In his most recent letter to Berkshire Hathaway shareholders, Warren Buffett alludes to a larger picture of the worth of your money. Cash for financial strength. Buffett outlines Berkshire's cash policy in that letter. A sizable cash reserve is used by Buffett and Berkshire Vice Chairman Charlie Munger to safeguard the company's financial stability. Berkshire specifically maintains a minimum of $30 billion in cash and cash equivalents at all times. As Buffett put it, we want your business to be financially unstoppable and never rely on the goodwill of others, or even that of friends. We both want to sleep comfortably, and we want our insurance claims, creditors, and you to do the same. In other words, the minimum cash reserve provides a safety net to protect Berkshire from unanticipated negative outcomes. Discipline in investing choices. Berkshire had $144 billion in cash and equivalents when Buffett penned the shareholder letter. That's more than 4 times the required minimum of $30 billion. Why so much money? Because the executive team at Berkshire doesn't invest only for the sake of investing. Instead, it adheres to its rules for investing, even when rising inflation reduces the purchasing power of the company's wealth. Using Buffett's cash position. There are 2 inquiries to ask to apply Buffett's cash stance to your financial situation. How much cash is necessary to avoid using credit cards, family members or friends, or asking for assistance? What criteria do you use when investing? Answering these queries is challenging. Not every scenario that could result in an unforeseen expense can be predicted. Additionally, you might not have the time or desire to record the criteria that guided your investing decisions. Fortunately, there's some general knowledge on these subjects that can be useful. How much money is sufficient? The typical rule for cash is to have 3 to 6 months' worth of living expenses covered. That serves as a starting point for a financial savings goal that you can modify according to your way of living. For instance, if you participate in extreme sports on the weekends, your emergency fund should be sufficient to pay both your living expenses and the deductible on your health insurance. You might also take into account your homeowner's insurance deductible if you reside in a historic house. You may aim for a greater cash balance that would, for example, cover 8 to 10 months' worth of living expenditures if your income future is uncertain. Establishing investment criteria. Following Buffett's advice, you would first reach your minimal cash balance before investing further money per your requirements. Particularly if you're a novice investor, your standards don't have to incorporate financial statistics or growth barriers. They might be a lot easier. For instance, do you desire comparatively robust equities? Take a look at the big American businesses. Do you desire dividend earnings? Consider seasoned dividend payers like dividend aristocrats. Would you rather save money on taxes by simply earning through appreciation? It would be appropriate to use growth stocks or funds. Would you prefer a specialist to choose high-quality stocks for you? Find quality factor exchange-traded funds or a stock selection service you can trust by doing your research. Before investing, it's important to know what you desire. If you're unsure, it's acceptable to temporarily hang on to more income until you sort it out. Having cash on hand will save you in times of need. It guards you against taking on debt with harsh conditions or withdrawing funds from your investments at the wrong time. Holding cash has a cost, and that cost increases during periods of high inflation. But in exchange, you, like Buffett and Munger, may rest easy knowing that your financial situation is sound.